Hey guys, welcome to today's live stream. I'm live in chat and I'm all about simplifying your trading journey. Like I always do. So, in 2 weeks, I streamed live. Already been busy. Yeah, I had a lot of things to do. So, that's why I haven't come up right here live to talk to you guys like I always do. So today we're taking a class, a session, a step further as we always do every Sunday. I will stream live. I teach you guys new things that actually helps you understand trading better. You understand? So I don't teach you guys the same thing twice. I actually structure everything layer by layer by layer by layer. So if you don't understand today's class, you can watch the previous one. So that's how my lessons are. So today I'm going to be teaching you guys something new, which is called trade management and what to do after entering a trade. Yeah. So last session, I taught you guys risk management. So today we're taking a step further, trade management. Sorry, turning out and the noise here is very much. So I don't know if you guys can hear me clearly, but I'm gonna try my best to be very open to you guys get to hear what I'm saying. So last time we talked about risk management, and let's do a little recap on what I talked about in last session. So in last session, I explained what risk management is and why risk management matters. Like I remember clearly, and advantages of proper risk management. I think I gave you guys that, and I told one of the advantages it protects your trading capital. Yeah, and it reduces emotional stress and the rest of them. And another thing we talked about was how to apply proper risk management and consequences of poor risk management. Can't really remember everything, but I know I touched these areas last session. And today we're talking about trade management. Yeah. Now, what is trade management? Now, trade management is every decision you make after entering a trade until you exit, right? It's actually different from risk management. Risk management is what you do before the trade, right? Now, trade management is what you do during the trade until you exit. Now, take for example, you have a car, right? Now, risk management is you checking the floor, checking the brakes, checking the tire. If the car is okay, you can drive it for that day. Now, trade management is actually how you drive that car. Do you understand? So that is it. Now, trade management is every decision you make after entering a trade. Now, for those of you who are trading with me, in my trading community, you guys really understand how I trade. Whenever I call a trade, I don't just leave it like that. I always manage the trade for you guys. That's why from time to time, I'm going to show you guys how the channel and how the community is. Later, from time to time, you see me call out trades and I manage the trade. I say tighten your stop loss, change your stop loss, break even. That's trade management. Now, what does that mean? Now, that's like I'm in on that trade, right? For example, I'm risking $20 on that trade. Now, proper trade management calls for whenever price pushes in my favor, whenever I'm up in profit, what would I do? What would I do when I'm up in profit? That's what I'm going to teach you guys. The idea behind tightening stop loss, breaking even. Do you understand? So now, what I do is whenever I call the trade, I tell you guys tighten stop loss, break even. Now, that is actually protecting that position. Do you understand? That's trade management. And the next thing I'm going to be telling you guys the advantages of proper trade management. And one of the advantages is it protects your capital. Protects your capital. That is one number one advantage. Capital protection. Now, with proper trade management, you get to protect your capital. Maybe you're up on a trade and you're risking, for example, $10 and trade price pushes in your favor. Let's say you're buying gold and your stop loss is about $10 and price pushes from minor drawdown to like $1, $2, $3 of profit, $4, five, six. And then you take profits about $20. When it gets to like $6, $7, $8. No, Proper trade management calls for tightening your stop loss, tightening your stop loss. Maybe from $10 you tighten down to like $7. So you're no longer risking $10 on that trade. It's now like $7. As time goes on, as price advances, you get to tighten and eventually go break even on that trade. Now, what does that mean? Break even. Break even means you're not risking anything on that trade. So what happens if price flashes down again, just close it out at break even without hitting the stop loss. That's if price reverses. So that's the advantage of break even. And number two advantage is reduces emotional decision. Now, back then in my early days of trading, there's something I do. Whenever I open a trade, I always watch it. I'm always watching. I'm always on my phone, tracking every candle, every candle. Now, it's going to start stressing you emotionally. You sabotage yourself if you're not careful. Now, what do I mean by sabotaging yourself? You either close the trade too early or close it too late. So that's what happens when you're not trading, you're not managing your trades properly. When you're always checking your phone, always checking, tracking everything, eventually you close the trade. You might get scared, panic, and close the trade. You also get scared and close the trade in tiny profits before not giving the trade time to actually play out. And the third on my list is it helps you lock in profit and take losses according to your trading plan. Now, here's what happens. Proper trade management, right? It helps you lock in profits and take losses according to your trading plan. Now, what do I mean by locking profits? Now, there are times when I call out trade. I'm going to be using myself as an example because it's what I do, right? There are times when I call out trades and I give you guys a particular price for take profits for our TP. And what then happens? I tell you guys to close out before you get to TP. Why? That's my trade management. Because I figured that okay, price is going to be reversing very soon. So we have to close that trade before we lose money on it. The same thing happens when I tell you guys to tighten. There are times when I also tighten stop loss and price eventually reverses because I hit the stop loss and reverses or maybe continues back. That's it. The same thing happens when you break even. When you break even, it's not always a guarantee that price will always go and hit your take profit. Break even is just to protect yourself. So that in worst case scenario, you're not losing money, you're not making money from the market. That's it. So that's break even. That's what I do from time to time, anytime I call a trade. Whenever I call a trade, I see an opportunity, price gives me an opportunity, or market structure gives me an opportunity to tighten stop loss. I always love taking those opportunities. I always tighten the stop loss to give me an opportunity to break even. Ah, that's actually better. I break even and I know that I'm not risking anything again on the trade. And that's it. And the fourth one on my list is it keeps your trading consistent. Keeps your trading consistent. Now, what do I mean by keeps your trading consistent? Now, a lot of people lack proper trade management. They don't know when to trade, they don't know when to close a trade, they don't know when to hold the trade. They end up holding their losing trades longer and closing their winning trades in a shorter period of time. So that's you won't be consistent in trading. Yeah. Because when you do hold your losses longer and your wins close them in a shorter period of time, you will be consistent. That's what happens. Now, for example, open a trade and beginners, what a lot of people do. They open a trade, for example, their stop loss is about $10, right? And they see their stop loss is about $10. And price they're in the drawdown. It's not yet a loss since they've not actually closed the trade. So it's an unrealized loss. Actually called the drawdown. And now they're in the drawdown of like, for example, $6, 7, 8, and their stop loss is $10. That's what their risk management permitted them to risk on that trade. Now, what do? They actually extend that stop loss. For example, they are longing, buying, same thing. The stop loss is $10. What do? From $10, they will not increase the stop loss to $12, $15, telling themselves that okay, when it gets to $10, to reverse. And at the end of the day, price gets to the new stop loss that they give themselves and close them out, and they get to lose more. Now let's flip it. Now they're in profit, right? And price pushes up a profit. For example, same scenario, they're risking $10 to make 20. Price pushes up a profit $5, $6, 7, and then drops down again to their entry point. To their entry point, they feel that it's going to be reversing. So the moment price goes back to $2, $3, they'll immediately close out the trade out of panic and fear. What then happens? If they continue like that, they're going to have more losses than wins. So their trading will be very, very inconsistent. Now, but with proper risk management, it keeps your trading consistent. Proper risk management and trade management keeps your trade consistent. Now, next thing we're going to be looking at is the consequences of poor trade management. Consequences of poor trade management. Now, what you get to face or what you get to suffer when you lack proper trade management as a trader. Now, number one on my list is what I explained. Make sure you move your stop loss emotionally. Get to move stop loss, close trades emotionally because you lack proper trade management. You don't know how to manage a trade. You're going to lose consistently. You're going to be moving your stop loss. Either you tighten your stop loss too early because of fear. You tell yourself, okay, I don't want this trade to close me out at $10. I'm scared to get to $10. You tighten your stop loss to $6. When it's not yet the right time, I'm not saying tightening your stop loss is bad, but you have to do the structure. So, lack of proper trade management makes you, move your stop loss emotionally. And second on my list is closing winners too early. I've already talked about this. You close your winning trades very, very early. Yeah, you close your winning trade too early. That's another consequence. You don't know when to hold your trade and maximize profit, and you don't know when to close and minimize your loss. Now, one thing about trading is how little you're able to lose when you're wrong, and how much more money you're able to make when you're right. So that's trading for you. The more little you lose when you're wrong, and the more little you make when you're right. That's what gets to determine if you're profitable, if you're going to be profitable in the long run or not. So that is it. With proper trade management, you'll be able to, be consistent with your results. And the third one on my list is letting users run. Same thing I've been explaining. Now, open the trade and they're in the drawdown and they see their price is approaching their stop loss. Now, since they don't understand proper trade management, what do? They delete that stop loss, they remove it, keep the account bare like that. And the user and for example, they're buying and price starts tipping. Tip gets a $10 drawdown, 12, 13, 14, 15, over $20 in drawdown. That's when they get close. Now they've let their losing trade to run further than they actually do their winning trade. Sometimes what I also do is when I'm trading, I don't all the time set the profit because I prefer to let my winning trade run than my losing trade. That's the best. I don't set take profits, I just leave it open because price can get to that stated level or stated price you're aiming to make profit of and keep pushing. So that's what I do. And the fourth one on my list is over managing every candle. Yeah, beginners they do this a lot. Group traders they also struggle with this. And sometimes I do struggle with this. But now what I do is I use my laptop for analysis, my PC. And once I've done that, once I've analyzed, I've called that trade in the Telegram community, what do? I go up with my phone because my phone is always in me. I can't carry my PC everywhere. Now, what I do is from time to time, I do check the charts. Not because I'm scared of losing, just because I need to manage my trades properly. I need to know the right time to tighten stop loss and when close out the trade, when to exit. Because beginners, here's how beginners trade. Here's how they trade. Their mindset is, oh, I just need to find entries, place the trade, and pray that it doesn't hit my stop loss. But pro traders think differently. Pro traders, here's how they think. They plan the trade, execute the trade, manage the trade, and exit. That is how it is. For beginners, they are doing things the other way. They look for entries, they get in on the trade, they don't manage it, and they start praying that it doesn't hit their stop loss. So that is not how it's done. And now, what I'm going to be teaching you guys is how to manage trades properly. How to manage trades properly. Now, number one is planning. Planning before entry. I've taught you guys how to plan. Okay, maybe I'll have a live video dedicated to having a trading plan, right? Building a trading plan. So first off, you need to have a plan. What is that plan? You need to know where you're getting in from. You need to know how much you're risking. You need to know what invalidates that trade setup for you. Because sometimes you guys are trading, you guys understand that whenever I call a trade, sometimes I feel like close out this trade, pattern has been invalidated. Now that's part of my plan. I tell myself, okay, if price does this, I'm going to close now this trade because to me, I'm wrong. So before it hits my stop loss, I'm going to close out that trade before I get to lose more. So that's what I mean. That's why I say trading is how little you're able to lose when you're wrong and how much more money you're able to make when you're right. So you need a trading plan. How much you're going to risk, how much you're going to make if the trade goes in your favor, and how you're going to manage that trade when it's in profits. What are you going to do? That's how it is. And number two is let the trade breathe. People don't do this. Let the trade breathe. Right? You open the trade. Don't always go back and check and monitor every count. You're managing every count. Eventually, once you start seeing count, because some people, what I do is initially, normally I trade on a 15 minutes time frame. Right? In my early days of trading, I go down to the 5 minutes. And what happens in the 5 minutes? Now, I've noticed something in my years of trading. Whenever I candle is whenever I candle opens in 15 minutes time frame, right? It takes 15 minutes for another candle to form. Now, for example, I'm on a buy trade and the candle opens and it opens bearish instead of bullish. Now, on the 15 minutes time frame, that candle hasn't actually closed, right? So eventually, at the end of the 15 minutes, it could actually close bullishly. Do you understand? It could actually close bullishly at the end of the 15 minutes, right? It could actually close bullishly. So, I'll get shown. Luckily, I put trust. I'll get shown. So let the trade breathe. And third one is to know why this SL emotional. Yeah. To know why the SL emotional. Tell you guys about that. It helps you avoid widening your stop loss emotional. And the next one is writing your SL and you go break even only when it's justified. That's how you manage your trade. Writing your SL and break even when justified, like I always do when trading. And the fifth one is exit early when stop loss is invalid. Before you hit your stop loss, you get to exit when setup is invalid. And the sixth one is journal and review every trade. Sorry, I'm kind of rushing because I actually got an emergency, so I'm going to be exiting very, very soon, right? I don't think we're going to stay 1 hour. So journal and review everything. So next class is going to be about journaling, right? I'm going to teach you guys how to journal a trade. Journaling actually helps traders improve. But people takes it, less likely. So underrated, but the moment I started journaling my trade, reviewing every trade, what I did wrong, what I did right, it actually helped me spot out my patterns. Because trading is pattern recognition, right? It helped me spot out patterns, and it helped me build and improve my trading strategy. So that is one thing about journaling. And then the common beginner mistakes, that's the next thing we're going to be looking at. It's trading without a plan, right? Number one is trading without a plan. Number two is moving stop loss emotionally. That is it. Number three is watching the charts often. And number four is failing to accept a probable outcome. A probable outcome. Now, trading is a game of probabilities, right? It's either trade goes in your favor or it goes against you. Do you understand? So it's a game of probabilities. And people always feel they need to win all the time. You do not need to win all the time. But with trade management, you get to protect yourself often. So that's it. So I think you should just head to the chat. So I get to show you guys one or two examples from how I get to manage my trades. The market is actually closed. Let me just show you guys one or two examples of the trade I took a while back because I haven't traded in a very, very long time. Right? Because market hasn't given me any reason to trade. So I'm just going to show you guys from a trade I took, I think about 2 weeks ago, 3 weeks ago. I don't really know. Yeah. Let me see. Some of the charts is kind of, I haven't traded in a very, very long while. Let me see. Okay, yeah. So in this scenario, you guys can see so the trade I took, and what happened there? Price dropped, and I'm looking to trade by like 7 a.m. to New York session, London to New York session. And during the London session, I saw this double pattern form, but it didn't reclaim the previous day's low. So I didn't do anything. Waited eventually when this candle closed inside of the previous day's low. You can see what happened. I went in long. And this is what I would have done live if I was trading this pair. Really? This is what I would have done. The stop loss is somewhere around. The moment price pushed up aggressively, this massive candle, I would have just broken even on the play. Took my stop loss to my entry point where I got in, and then let it run. It hit me. It's that easy. Same thing here. I took a sell. Now here's what I saw. Price dipped. This was the previous low. Came here, broke out of it, retested, rejected, and dropped. Now, let me delete this one. Now you can see this is around 7 in the morning. So this one I won't be getting in through. Now this is what happened. I got in for a short. Targeted 1:2. And here's what happened. Here's how I managed this trade in real time. Now, the moment price dropped, and so the moment price drops like this, pushed up, and eventually continued down. What would happen? Now I would have tightened my stop loss to this point. From here, tighten to this point. Tighten it, and eventually I would have broken even on the trade. Easy peasy. Easy peasy. I don't think I have lots of trade because I cleared the chat. So let me take us to my I don't know if you guys can see my screen. Why the screen is not sharing. don't know if you guys can see my screen. I don't know. Let me see. I think my screen wasn't sharing. So, okay, let me just go over what I explained earlier. So, here's what I was. Let me just explain. Okay, so here's a trade I called on. I think on last month, Thursday. Now, this is the previous day's low. And at 7, I saw this double pattern. But I didn't take this trade because it didn't close inside of previous day's low, right? So during the New York session by 1 p.m., that was when XAUSD closed inside of it. You can see this candle. Once in that, I went to I think my stop loss was right here, the last point of hesitation. And the moment price pushed up, dropped down, pushed up again aggressively. Before I got to my TP, I actually broke it. Why? Because you can see the momentum of this candle pushed up. You can see this other one. So price is less likely come back. So what do? Just tight, I just break even. Take my stop loss to my entry points, just in case anything funny happens. Same thing on this trade right here. Same thing here. Took a sell. Now here's what happened. This was the lowest point of the previous day before the market closed. Now here's what happened. Price to the previous day, rejected and dropped. Now this is signaling further drop to me based on my analysis. Now this is not actually full analysis. I actually combine lots of things, but I'm just using the previous days to show you guys. Now I got in for a sell. Now price dumped here, came back up right here, dropped again. Now here's what I did. I tightened my stop loss from here to this point, right? So that is it. So let me just walk you guys through my Telegram community so you get to see how I do call out trades. Let me see. Let me see. Let me share my. Yeah, share. It's sharing. Okay, yeah, it's sharing. So this is it. Let me see. I've not traded in a very, very long time. So let's see. When last I trade? So we did go there. Okay, we don't stop loss. Okay, this week has been okay. Yeah, I think this is okay. No, you guys can see. Let me click on that. You can see I called out BCC from here very long, and later on I told everyone break even on BTC. I told everyone to break even on BTC because I wasn't with my PC. The first analysis was with my PC, but this one was with on my MT5. And you can see the message break even on BTC. Jab stop loss to the entry point. So that is how trade management is done actually. Right? That's how trade management is done. And let's see. Okay, this one was a buy on gold, right? And I told everyone, you can see right here, Titan SL on gold, Titan SL on gold. That's what I do. That's what I always do. I always manage to trade. Tell you when to tighten, tell you when I'm closing and stuff. So you join me to close and let me see. I've not traded in a very, very long while. So okay, let me see this one. TPJPY. Okay, so I can stop loss. Um, okay, I think I called gold. I called gold for a long. Okay. And see later on, this was around 7:28. I told you guys I always trade there. My screen has stopped sharing. What's happening to strategy? What's happening? My screen isn't sharing. What's happening? I think it's better now. Let me show you guys what I mean. Now I called gold for a buy right here. You can see buy, and later on I sent a screenshot to exit stop loss, right now position for profit, and eventually I told everyone to break even your plain trade, and I told everyone to close. And this was the result for that. So that's how I feel. Trade management. Looking for one that actually hit our tighten stop loss. Maybe hit our break even. So if you go to the Telegram community, the link community is in the description of this video. So just go through it and you see I always do manage the trades. You can see GPUSD. And I told everyone to break even because we're close to TP. You can see our TP is right here and it's the price. So our stop loss was somewhere around here. Go here and broke even. It's as easy as that, right? So all you just have to do is just go through the Telegram community and you're going to see all that. You're going to see all that. And I think I'll have to run because something just came up right now and I have to run. So I guess I'm going to see you guys next week. Maybe next week we'll talk more about trade management because I'm not really satisfied with to this class, and I'm going to talk more about it next week. So be part of my trading community, so you also get to understand why how I get to do my trade management whenever I'm calling the trade. So that is it. That's it. So I guess I'm going to see you guys next week Sunday, same time. And just stay connected, stay glued to the Telegram community. That's where I get to drop my trading insights and everything. So, yes, I'm going to see you guys next week. And bye for now.